Senior Economist with the Emerging Asia team at Capital Economics. Gareth Leather joins us now live from London. Hi, Gareth. Thanks for being with us. So we heard about the possibility of dropping Hong Kong's special trading status. We've also heard the U.S. Congress talk about certain sanctions because of Chinese actions. How might all this manifest in terms of the economy and a potential trade relationship going forward between the U.S. and China?
I think there's two angles to look at here. The first is the protests that are going on at the moment. They're going to put back any recovery that we're hoping to see in Hong Kong over the next few months. If you look what happened around this time last year with the proposed extradition law, it led to massive protests. And it also meant a kind of slump in Chinese tourists and a collapse in retail sales as people stayed at home because they were worried about getting caught up in the riots. Now, that's going to put back any recovery that we might have been expecting to see in Hong Kong over the next few months. In terms of the longer term impact, if this change, if this imposition of the security law by China does lead to Hong Kong losing its special status, then you can expect to see Hong Kong's kind of position as a gateway for investment to China diminish over the next few years. And the city-states such as Singapore or possibly places in Shanghai and the rest of China taking their place.
Okay, give us just a better idea of how much that actually means to China, losing that special trade status, affecting other markets in China. Do you think the Chinese could find an economic way around that, or no? Will it fundamentally harm their economy?
I don't think it's going to have a huge impact on China's economy. So Hong Kong's obviously got a big port, but China's got plenty of spare capacity there, so that isn't a worry. I think the way that Hong Kong has been used in the past is for a kind of leaping off point for Chinese companies if they wanted to go and invest abroad. But I think the markets now in China are sophisticated enough that I don't think that's going to be a huge problem either. So it's not a kind of a massive impact on China's economy. It will have a big impact on Hong Kong's economy, though.
Okay. Tell us what you think maybe the worst case scenario is for the global economy, really, if the U.S. and China don't get on friendlier footing, if this new Cold War develops, as our correspondent was just saying, and the U.S. and China stay on this path of conflict.
I think it could be potentially quite large, but just given what's going on at the moment with the global pandemic, which has led to a slump in economic output around the world, I think that's the much bigger thing going on at the moment. And certainly the trade war is a downside risk, certainly for companies, US companies that have big exposure to China. But really, I think all this is dwarfed at the moment by what is going on with the coronavirus pandemic and how that is impacting on global economic output with the shutdowns in place.
Okay, Gareth Leather, great to have you. Thanks so much for joining us.